All right, turning to investment strategy, our next guest still favours a diversified portfolio that has characteristics of both growth and recovery plays to take us through where he's looking for the opportunities. Marcus Bogdan from Blackmore Capital joins us from Melbourne. Marcus, good to talk to you.
Morning, Andrew and Ingrid.
Okay, so has your strategy changed at all, given the news of the past 2 days?
No, it hasn't changed in the last couple of days, but it has changed in the last couple of months. And there's been four indicators, sequential indicators, that have improved the outlook for equities, improved the outlook for cyclicals and value. It started with the FY20 results season in August. It was better than expected. It's been confirmed by really good AGMs and first quarter trading updates. The US election is primarily reasonably settled now, and it's in a balanced. It's balanced there between a Biden and possibly a Republican Senate. And then obviously in the last couple of days, you've had much better news on a vaccine. But I do think you need a cocktail of opportunities there in terms of the vaccines, and I think more will come. So all of those things are pointing to a shift towards more value and cyclical, but there are also some very good, I would say, defensive industrial companies that have been left behind, which are also providing opportunities as well. And we don't want to be just positioned with one factor or one driving part of the portfolio.
That's fair enough, but can you give us some examples of those sort of defensive plays that you think will withstand the pressures that some are facing right now?
Yeah, I mean, Brambles have updated. They had a first quarter update. They've guided to the upper end of their guidance, both in terms of revenue and earnings. They're primarily a Northern Hemisphere company, so they do give you good insights into consumer staples in the US and in Europe. And they're still seeing restocking in consumer staples. So the demand side there is tracking very well. I mean, constant currency revenue growth is around 7%. And one that's really lagged recently, despite a very strong first quarter update, was Woolworths, where you saw like-for-like sales above 11.5%. Very strong liquor sales, recovery in Big W, and 100% uplift in online. And Woolworths price is below where it was pre-COVID, but I think the business is actually in a stronger position. They are leading the way online. It's 8% of their revenue now, and you've got the additional spin out of the drinks business, Endeavour, which I think will come in the next year, which will allow for a capital return. So strong momentum there. Probably going to see a good upper single growth in EPS and DPS would be my two examples on the sort of defensive growth.
Yeah, Marcus, on that point, more broadly, as far as retailers are concerned, what sort of opportunity you are seeing? Because obviously we've seen the growth of online retailers during the pandemic. What's your expectation as we go forward, and also as far as the bricks and mortar shops are concerned?
The discussions we're having with retailers, and I had a discussion with a leading one yesterday, they're still seeing strong momentum in online sales, even though in Victoria we're coming out of lockdown and people are physically visiting the stores. There hasn't been any slowdown on online. So I think that trend is enduring. I think that's encouraging as well. So I think that thematic is real, but then it comes back to the price you're going to pay for those types of assets.
I was going to say that because valuation is sort of everything. I mean, it's one thing to say, because some of these stocks have just, Zoom's a good example of an overseas one that's just done so well. It's hard to see, that being attractive from a valuation perspective, but you're saying there's still value left in some of these stocks, but you've just got to be really selective.
Absolutely. And I think, Goodman Group was, off considerably yesterday, which is obviously a large online warehouse and logistic company. Those are the stocks that you would buy, if this trend and this rotation continues. If they do get left behind materially, that's the opportunity then to go back and top those names up.
Yeah, because I'm interested because these trends that we've seen during coronavirus, they're not going to go away. I mean, a lot of them have just been, and we've been talking about this for a long time, they're just accelerations of trends that were already in place. So, I'm interested in this big rotation we've been seeing out of some of these stocks because, as we've said, these trends, particularly with things like industrials where, e-commerce and, is the way of the future, certainly you expect that to continue. So do you think a lot of them have been overdone? I mean, you said Goodman's is one that's been overdone in the last couple of sessions. Have you seen other ones overdone as well that you've perhaps taken opportunities with?
Yeah, I think, look, I think Woolworths is definitely first and foremost. And, those quality names where they're absolute industry leaders in their groups, and they will have better operating models going forward. And so it would be the Brambles, it would be the Woolworths, and in the property side would be Goodman Group would be the standouts for me.
All right, Marcus, a pleasure to have you on the show. Lots to watch, lots that we've been watching over the last few days, but no doubt next week will be different. So we'll look forward to speaking with you then. Thank you.
Thank you very much. Cheers.